On July 5, 1991, at exactly 1 p.m., banking regulators simultaneously entered 69 countries and shut down a bank with $20 billion in assets. No warning. No second chance. Overnight, the largest financial institution in the Third World simply ceased to exist. But this wasn't a normal financial collapse. This was the biggest banking cover-up in modern history. And you've probably never heard of it. What I'm about to tell you in the next 23 minutes isn't conspiracy theory. It's documented history that was deliberately erased from collective memory. A bank that financed dictators, laundered money for drug cartels, facilitated the purchase of nuclear weapons, and operated as the CIA's financial arm, all while being regulated by the same governments that pretended to know nothing. First, I'll show you how this bank became untouchable. Then, the secret operations no bank dared to do before. And finally, the real reason why it had to disappear so quickly that to this day, there are sealed vaults that have never been opened. This is Collapse Chronicles, and this is the story of BCCI. Pakistan, 1972. The world was divided by the Cold War. Oil was about to change the global balance of power, and a banker named Aga Hassan Abedi had an ambitious vision. Abedi wasn't an ordinary banker. He was charismatic, visionary, and had something few third-world entrepreneurs possessed: direct access to the most powerful political leaders in Asia and the Middle East. And he was about to create something no regulator was prepared to face: the first truly global bank that answered to no specific government. Abedi's move was brilliant. While all major banks were based in London, New York, or Tokyo, he created BCCI, Bank of Credit and Commerce International, with a legal structure no one had seen before. Here's what makes this genius. He incorporated the bank in Luxembourg, established operational headquarters in the Cayman Islands, registered the holding company in the Cayman Islands as well, but operated mainly from London and Karachi. Why does this matter? Because whenever regulators from one country started asking questions, BCCI would say, "Oh, but we're regulated by another country." And when that other country investigated, the answer was, "Our main operations are elsewhere." It was a regulatory three-card monte. And it worked perfectly for 19 years. But who was financing this bank out of nowhere? Because you don't open branches in 73 countries without serious money. The largest shareholder of BCCI was Sheikh Zayed bin Sultan Al Nahyan, ruler of Abu Dhabi and one of the richest men on the planet. He put in $1.5 billion right off the bat. But the other investors tell a more interesting story. Bank of America came in with 25% of the initial capital. Yes, you heard that right. One of America's largest banks helped create BCCI. And this is where the official narrative starts to fall apart. Because Bank of America doesn't invest $2.5 million in an obscure Pakistani bank without complete due diligence. They knew exactly what kind of operation they were financing. The question isn't, how did BCCI grow so fast? The question is, who needed a bank that no government could regulate? And the answer will shock you. In the 1980s, if you were a dictator needing to hide money, an arms dealer looking for financing, or an intelligence service executing secret operations that Congress could never know about, you had a phone number. And on the other end of the line was BCCI. Let me give you a sense of what we're talking about. Operation 1. Industrial-scale money laundering. BCCI created what regulators later called a special client protocol. It was a euphemism for this. If you had enough dirty money, they created shell companies, numbered accounts, and transfer networks so complex that even forensic investigators couldn't trace them. Manuel Noriega, dictator of Panama, had more than 50 accounts at BCCI. Ferdinand Marcos, dictator of the Philippines, channeled at least $500 million through them. Saddam Hussein moved oil money through a network of BCCI accounts in London. Operation 2. The nuclear black market. Now it gets worse. Much worse. Abdul Qadir Khan, the father of Pakistan's nuclear bomb, used BCCI to finance the largest nuclear proliferation network in history. He sold nuclear technology to Libya, Iran, and North Korea. And the bank facilitated every single transaction. But here's the detail that changes everything. In the 1980s, the American government knew all of this. Not suspected, not had indications, knew, provably, with documents. And still, the bank continued operating. Why? Between 1980 and 1988, the CIA was executing the largest covert operation since World War II, arming the Afghan Mujahideen against the Soviet Union. The problem? The American Congress had severely limited funding, and covert operations cost money. Lots of money. BCCI became the perfect solution. How the scheme worked. 1. Saudi oil money entered BCCI accounts in the Cayman Islands. 2. The bank converted it into weapons purchased through Pakistani intermediaries. 3. The weapons reached Afghan rebels without any record. CIA officers literally used BCCI branches as meeting points with agents. I'm not exaggerating. There's congressional testimony about this. William Casey, CIA director at the time, met regularly with BCCI executives. And here's the fact no one can explain. CIA agents had personal accounts at the bank. But there's a twist that makes everything even more insane. Hold on to this information because it'll make complete sense in a few minutes. While BCCI was laundering money for the CIA, it was simultaneously financing the Medellin cartel. Let that sink in for a second. The same bank, the same accounts, CIA money and Pablo Escobar's money passing through the same channels. And everyone pretended they saw nothing. But here's the thing about empires built on secrets. Eventually, someone talks. 2 investigators start connecting the dots. Jack Blum, a lawyer working for the Senate Foreign Relations Committee, and Robert Morgenthau, New York District Attorney and probably the most tenacious financial investigator in the United States. They weren't initially investigating BCCI. They were tracking drug money. But every money laundering investigation in the 80s eventually led to the same place. A bank with branches in places that didn't even have signs. Accounts that didn't appear in audits. Transactions that literally violated every existing banking law. Here's where the story gets cinematic. Morgenthau issues a subpoena for BCCI records in New York. Their response was literally, "Those records are in London." He asks the British. Response, "This is regulated by Luxembourg." Luxembourg, the holding company, is in the Cayman Islands. Cayman Islands, operations are conducted from Abu Dhabi. See the pattern. It was the same 3-card Monty that worked for 19 years. Except this time, Morgenthau didn't accept no for an answer. He did something radical. He started investigating individual bank employees instead of the institution. Because people can be indicted. People are afraid of prison. People talk. And in 1990, an executive named Amjad Awan broke. Awan wasn't just any executive. He was the personal relationship manager for Manuel Noriega, the Panamanian dictator who had just been arrested by the United States. And he had documents. Stacks of documents. Bank transfers linking BCCI directly to purchasing weapons for the Contras in Nicaragua, laundering $14 million per month from the Medellin cartel, secret accounts of more than 20 heads of state. But what he revealed about the bank's internal structure was even worse. Here's the truth that brought everything down. BCCI didn't have $20 billion in assets. It never did. The complete audit revealed that at least $13 billion simply didn't exist. It was accounting fraud on a scale never seen before. Money that appeared on balance sheets was recorded in phantom accounts, loans to companies that didn't exist, investments in fictitious projects. They had created custom accounting software that literally invented profits. When external auditors asked for deposit confirmations, the bank transferred the same money between accounts in different countries to make it appear there were more assets than actually existed. It was a Ponzi scheme, but not an ordinary Ponzi scheme. It was a Ponzi scheme that governments around the world needed to work. When the Bank of England realized the scale of the fraud in June 1991, they faced an unprecedented problem. You can't just let a bank with operations in 73 countries collapse slowly. Because in each of those countries, there were accounts of people who could not have their names associated with the scandal. Politicians, generals, intelligence chiefs, industrialists. So they did something that had never been done in modern banking history. July 5, 1991, 1 p.m. London time. Coordinated by time zone, regulators from 69 countries received sealed orders. At the same second, they simultaneously entered 400 BCCI branches around the world. No prior warning. No chance of defense. No legal process. The bank simply ceased to exist. But here's what makes this truly sinister. Of the $13 billion stolen, investigators recovered less than $2 billion. The rest disappeared. Numbered accounts in tax havens were emptied hours before closure. Vaults and branches in Karachi, Abu Dhabi, and Panama were found empty. Accounting servers were destroyed. How do you organize an extraction operation of $11 billion in cash without any government noticing? The answer is simple: you don't, unless you have help. In 2010, declassified CIA documents reveal that American agents knew about the accounting fraud since 1985, 5 full years before Morgenthau began his investigation. British MI6? Since 1983. French intelligence. 1984. Everyone knew. And everyone let the bank operate because it was too useful to be shut down. Until it wasn't. The collapse of BCCI was called the biggest banking scandal in history by the American Senate. But unlike Enron, unlike Lehman Brothers, unlike any other corporate scandal, no one really paid. Aga Hassan Abedi, the founder, died in 1995 without ever being tried. Top executives got short sentences in countries with comfortable prisons. Depositors lost billions. And the governments that facilitated everything filed the documents as national security. To this day, there are 27 sealed vaults in a Bank of Luxembourg deposit containing BCCI files that are under perpetual court order of secrecy. No one can open them. By international court order. What's in there? We'll probably never know. BCCI proved something disturbing. If you're useful enough to the right people, you can break literally every rule. And when you finally fall, the same people who used you will make sure the complete truth never comes out. If this story left you in disbelief that something like this actually happened, leave a like. Because this is exactly the kind of corporate scandal that should be in every history book, but was deliberately forgotten. And if you think a secret criminal bank is impossible in 2025, let me tell you about Danske Bank and how 200 billion euros in dirty Russian money passed through a respectable European bank, while everyone looked the other way. That video right here will show you that nothing has changed. This was Collapse Chronicles. Thanks for watching.